All right, good morning, everyone. Welcome aboard. I'm going to get started pretty quick. We have comments coming on the wire here from Mario Draghi. Obviously, we had the ECB interest rate decision earlier this morning. No change as expected. We are seeing some commentary here that's a little dovish at first from Draghi. I'll try to give you updates through the session, guys, but he's saying that QE will run until at least March of 2017, until sustained inflation adjustment. Recovery is gradually proceeding. Stimulus will help rebalance risk. Says it's crucial to avoid second round effects, and growth is supported by domestic demand. So it's kind of playing both sides. We'll continue to watch the euro. Don't have anything on the euro right now. Had a position on the sterling overnight. We'll go over that. But for the euro, I'm looking for, and we'll go over the update in a moment, but I'm looking for either a drop into this median line support that we added yesterday, if not into the key support barrier down near like 110.65, 110.45. Or if we break above this, I need to see this hold as support before I can start pressing the longs, because you're at a very critical juncture here for the euro. So we'll continue to monitor these comments. Usually don't really trade intraday within the presser. We'll just have to see where he kind of rounds out the expectation, and we'll give you updates on that throughout the session here. All right. Good morning to everyone in the room. Hope you are all well. Graham, Eileen, Adam, Tabor, Rick, Pooja, Pete. Great to see you guys. So look at the economic docket for today. We did already get the initial jobless claims. That just hit the wires as well. The bigger print was the fact that ADP, or the non-event maker, was the fact that ADP came in basically right in line with expectations, 173. You did get a slight upward revision to the previous month from 156 to 166. So take it for what it's worth. Didn't really generate much volatility. A lot of times people will tend to use this as a barometer for the non-farm payroll print. But as we always like to note here, this is notorious for missing larger swings. They do tend to move together. But ADP is notorious for missing some of those larger swings in the more encompassing non-farm payroll, which is on tap tomorrow. Do keep in mind that later this afternoon we do also get, or ahead of this afternoon, 11 o'clock, we do get the oil inventories with what gas is doing right now. OPEC is in the news. Whether they actually decide to put a ceiling on production, try to stoke prices or not. I've heard this argument a million times, so I'm really not putting too much faith into it. That being said, you do have the addition of that meeting and also oil inventories at 11. So just keep that in focus if you're trading the oil market. All right, a quick roundabout. Here's what the U.S. dollar looks like heading into the U.S. session. You have sort of a split decision here, yen and sterling marking some of the stronger moves overnight. Yen biggest mover, 0.5% to the upside, and sterling with a nice rally. I was part of that. I got taken out of that overnight at the limit. We're seeing it test that high again and kind of get rejected. So we'll take another stab at the sterling, I think, at some point today. Aussie, biggest loser on the session, down 0.69%. That's basically at support right now. I kind of wanted to see us hold where we are right now in the Aussie, and we'll talk about that as well. As always, feel free to throw out any questions, trade setups you guys want to review. One last shift. Quick note that you did see the overnight swaps, Fed Fund futures again drop now to 20% for June, continuing to price out the possibility of an interest rate hike this month. And that's going to sort of help us propagate a little bit more of a weaker dollar on the near term. Still, you're seeing that July is over 50%. Keep that in focus. Says Draghi, downside risks related to global economy and the Brexit vote. It's going to be all about the Brexit this month until we get that deep in. Euro area damped by slow structural reforms, slow emerging market prospects. These are the headlines that are just hitting the wires right now. Inflation to pick up later in the year, to remain low or negative in the coming months. Pretty dovish here. All right. Second quarter growth may be slower than first quarter. Recovery to continue moderate pace. Fiscal stance in euro area slightly expansionary. Okay, we'll continue to monitor these as they come through. So first things first, let's go over the update from last night, which was on the euro dollar since we're watching this right now. Here's what we look like. I had near-term resistance right here at this 111.87 into 111.95 region. You saw that we broke that last night. We came back, checked it as support. We came into the 236, a basic 236 to the drop, and here's the reversal. So you did have some opportunities for the long side here. Really don't like to flirt with the euro ahead of the ECB. So again, the focus on the sterling position, I think for me was a little bit easier to call. For the euro, you're looking for, if this is in play, and again, as I said, we don't have too much conviction as it stands right now. I don't want to really stress this formation just yet. But if we do break below this, right here you have not only the low for the week, okay, but you also have the 200-day moving average, 200-day moving average. That's sort of a structural support area we'd like to see hold. Here's what the euro dollar looks like on the daily basis. Okay, it says ECB raising inflation 2016 forecast keeps 2017 and 2018 unchanged. Okay. Is this range right here. So that's that 200-day moving average. And here's that key, 110.65, 110.45. We talked about this before, but now in time, it also converges on the lower slopes for the broader structure we've been following off the yearly low. This is actually December, not even the yearly low. So look for a possible drop into this region or a break and check of support of that 112, 111.95 region as support to move higher. But either way, we're looking for some basing here in the euro dollar. See how we map out for today after this news conference. You might get a good opportunity near the lows here. If not, that 110.65 in general, it's a 50% retracement, so it's a really nice area. Any questions on the euro? Levels unchanged. See if we can get sub 111 basically into that 200-day. Or again, a break in defense of resistance as support. So we'll see if Draghi can't get us started with something today. Moving right along. If there are no questions on the euro, let's jump into the radar charts from last night. We had Aussie, Kiwi, and CAD. Before we do, let's just take a quick look at the sterling, a quick update on that. Here's the kind of bias that I was working with last night. Look, you had a really good opportunity. I actually had the long on from earlier in the session. There was a trigger that gave out yesterday, or I thought was giving out here, as you were marking divergence into those lows. We sat in it basically all day long. A break of the Asia opening range confirmed the move. I had a limit right along the lows here, which kind of triggered right overnight on this spike. So the only thing I'm concerned about, and I'm ultimately still looking for a possible move lower, remember, this is just resistance here, an outside day reversal off the yearly open. We talked about all that. So this is the first area you'd expect to see some rebound, which is what we're getting. We're now checking the underbelly as resistance. And on a near-term prospect, I think you might be teetering out here in a little bit. So I'm on the sort of hunt, lookout for possible near-term short triggers. Here's the slope we're working with. Slight adjustment on that as well. On this sterling trade, let me just open this up. Draghi says structural reforms needed in all euro area countries. Here's where the fluff starts to come out. So, not going to give that too much credit. Focus should be on actions to raise productivity and improve the business environment. No, it's fluff as well. Okay, try to keep you updated on that. So on the sterling, again, the median line here was a perfect touch and a nice little rebound. I don't want to get too aggressive on the rebound play. I think I'm done with the long scalps for now. If it breaks higher, I would be looking for shorts near 145, near 145.30 specifically. That's the May high day close. And again, an area of which I'd expect to see a little bit more of maybe a possible short trigger play. But near term, still looks like you're at risk for some more losses in the sterling. Nice little scalp and overnight trade there. Any questions on the pound? All of these are on the menu, guys, as you head into tomorrow's non-farm payroll print. Now, keep in mind, it is the close, well, it's not even the first full week of June trade, but certainly the event risk that's on tap tomorrow is going to be the biggest thing so far, or the biggest thing for the dollar that we're going to see this week. So keep that in mind. You got the Aussie dollar, Dollar Cad, Kiwi dollar, Euro dollar, and Sterling dollar, which are all sort of on the menu. Yen, we'll take a look at that in a moment. I'm not sure there's actually going to be a play for it tomorrow, but it's typically a very strong performer or reactor, let's call it, to U.S. data. Okay. So feel free, to take a snapshot if you need these levels. One other thing, just real quick for the pound, if you take a basic retracement, just off, oh man, this thing's driving me crazy. Bear with me one sec, guys. Sort of take just a basic retracement just off that drop. You can see that the 236 is exactly where we capped out last night and exactly where we capped out again. That's like 44.68. And again, on the top side breach, the 50 line, you're looking at around 45, 45.19 area. So too cluttered here to map out with some of the levels that we're already watching. So I just wanted to add that there, sort of, where the first area, the first region of initial support is basically what we're testing right now. Okay? Sort of puts a very interesting view on where the Aussie is. And there's another trade where I'm still looking for possible moves here as we head into the U.S. Open. Here's what it looks like now. So we're coming into some basic support, and I kind of wanted to see this hold into that 72.05 barrier as we noted last night. That's the 618 retracement from the advance off the lows, and you also had a lower median line parallel right there, basically, right? So this is basically, oops, and it's starting to run without me. Of course. So I was looking for a hold and a trigger right here. For the upside, just to play a near-term rebound off this. We don't know if this is necessarily going to hold, but keep in mind that the Aussie dollar has had a pretty nice stretch and a pretty nice pullback at this point. So remember, we came right into the yearly open yesterday, 72.81, pulled back. We closed basically right at that 200-day moving average, and we came back into former support, 618, 72.11, 72.05, and certainly near term, that lines up really nice with basic structural support. Okay, so we're right here basically, and looking for long triggers. You just had a 18 pip run off the low, but keep in mind the ATR is pretty tight on this. So if you do get involved on these, we want to be sparing on them. We want to make sure that we're chipping away at it as it starts to move through the targets. If we break 72.05, look for it to make a new low. And when I say new low, basically your first initial target is going to be the weekly open, and that comes at exactly 71.75. And then the low that we made early in the week, which came in at 71.47, just zoom this out real quick. You look for another tag of the lower median line parallel for this formation that we've been following. Here's what it looks like on the daily chart again. So like this region to satisfy a new low before rebounding higher. Not my favorite outcome. Still like the constructive approach. We're at support right now. I'm on the lookout for long triggers. The dollar index, we looked at that earlier. I didn't look at the 30-minute with you guys, but here's what the 30-minute of the dollar index looks like unchanged. If you guys remember, we were looking at this on Twitter yesterday. I don't know if it's still on the stream, but it's still on the Squawk stream if you want to check it out. It's the same formation, upper median line parallel, still moving right in lockstep with that 100-day moving average, and on whole, we'll still want to remain bearish near term below that region. You can see that the lower median line, or the median line, excuse me, right off that structure that we drew earlier in the week has still continued to give this thing guidance on every single low almost. So on a downside break, you can envision a scenario where Aussie sees a nice little rebound off of that key support structure right here at the 72 handle. I basically want to see it hold 72. If it doesn't, look for that low day close, 71.75. Look for the low that we made for the week. All NFP plays, right? All NFP plays. For the NFP, we might as well talk about NFP scenarios on a real strong print, guys. So the expectation is as such. Here's what the outlook looks like. You're looking for a print of 160,000, with unemployment expected to hold still at 4.9. So no revisions to the expectations here for NFPs. Again, we're going to be looking for revisions, and we're going to be looking for changes in labor force participation. If it comes out 200 plus, and you get a topside breach above that 100-day moving average, slopes resistance, look for a pullback as hold, as support, and will favor the upside still. If it comes in line with expectations and the market rallies into the highs, I would be looking to fade that move, okay? Especially if on a failure to punch through this slope, which we've continued to follow so far this week. Finally, if it comes weaker than expected, specifically anything like 130 or below, or if you see this uptick, anything beyond 5.1, at that point you would be looking for a straight breakdown. That kind of scenario would be very hard to actually jump into the trade, right? Because it's just going to kind of run right on you. So ideal scenario comes right in line or a little bit less than expectations. You see a spike into the highs that fails, gives you a nice opportunity to get short on it. So I want to see if Aussie is going to give us a hold here. Any questions on Oz? With the clear recognition, again, that 72.80 barrier is the yearly open. Pretty big deal. Any Aussie crosses you are watching? You know what? I haven't really been watching the crosses lately, to be quite honest with you, because we do have NFPs. I tend to be a little bit more heavy on the event-driven ones for the week just because I'm much more near-term trader in nature. The dollar pairs for NFPs you're watching. Aussie most then? Eileen, I'm still hell-bent on the sterling. I've been all over that in and out all week. So I would say sterling, Aussie for sure. I want to see the Aussie rebound. That's something we've been waiting for a while, right? I would say Aussie's on the plate. Dollar Cad for sure is on the plate, especially in the event of dollar strength. Dollar Cad would be the way to go, I think, on the long side. On the short side of the dollar, yeah, I would like a long Aussie trade, a long sterling trade, even euro. If we dip into that key region of support, I know that Jamie has we also have a swing entry there, guys. I think if we get that dip into key support, you're good to go on the euro trade, especially if the data comes out a little bit more on the soft side for the dollar. So those are the sort of scenarios I see playing out in the pairs I would play them. You're more than welcome. Thanks for the eyes, says Eileen. You're more than welcome. So let's take a quick look here Tabor, for the Aussie crosses, let me know if there's a specific one that you're looking at. I'll be more than happy to take a look at any of them, man. It's just I'm kind of focused on the dollar crosses right now. Kelly, sterling yen, you got it. JPY. Okay, let me run through the rest of these. So if there are no other questions on Aussie dollar, looking for a support hold here, I'd like to see the opening range really give us a little bit more of a conviction hold. If that does hold, tack on a quick retracement, look for a 50, a 618 as your first initial targets, but inevitably we're looking for a little bit more of a substantiated rally here in Aussie. Moving right along, Kiwi dollar. What a textbook resistance play, though. I just want to show you the daily first to show you how big of a region this is, on the near term. So we have the yearly open, which is at 68.27, 68.28 right here. And you have the confluence of the lower median line parallel right off the yearly low. Okay, real nice region. We came right into it. We had highlighted this earlier in the week on the Kiwi update. We came right into it, held, and we kicked off. So from the near-term prospect, the trigger wasn't very clean because it was kind of like a meander, very, very tight ATR. So again, for me, it wasn't really on the menu, but it was a very clear move. So we came into the yearly open, clearly failed. You saw a downside break of the Asia opening range, and it's been kind of on the move since. So just as an initial target, 67.72 is near-term support. Nice high that we made late last week. If you tack on a quick retracement just off the lows here, it actually ends up being the exact 38.2 retracement. The 50 comes in at 67.50 and the 618 is a level we're already watching at 67.35. So don't really need this retracement on there, but just to verify the levels there. Still looking constructive while within this formation. And again, we need to see a break and hold above 68.27. Same setup that we talked about on Sunday, guys. This really needs to see a break above that for it to remain constructive. That being said, the long bias is at risk sub 68.27. Now, I'm a little bit more reluctant, and I really think that we can get a bigger play for this on the Kiwi. Don't forget, next week we have the RBNZ interest rate decision on tap. Wheeler's always known to be a little bit more of a talker than necessarily a policy changer, so we'll be looking for some of his comments to really charge some moves in the Kiwi here. But in general, I think you get some more plays and some more volatility on Kiwi as we head into the RBNZ early next week. Any questions on Kiwi? All right, last but not least was our position on the Dollar Cad. So the only thing I wanted to highlight here, and I kind of put this out for Daily Effects as well, just to kind of give them a highlighted range of what we're looking at. The only thing we need to be sort of focused on, I think, for Dollar Cad was the opening range for the week, which basically discounted this yesterday as a failure, right? The lows came right around a basic 236, heading into tomorrow, heading into overnight trade, I should say. That same level, which is the weekly opening range low, a basic 236, the weekly open. All of this converges on the lower median line parallel, which comes in at basically 130.20, 130.15. So that's the key support. In my mind, that's what I'm going to work as the near-term bullish invalidation level. So as long as we stay above this, I'd like to be buying pullbacks. With an ultimate target of 133.11, 133.25, we really haven't changed this setup in quite some time. It's just kind of taken a little bit of a breather here with some sideways motion. So again, we don't want to chase these intraday moves on a move like this. I really kind of need to see us break the median line and a pullback to get long, or on a scenario where we break down, I look for triggers against the weekly lows. Definitely do not want to be chasing these breakouts on the actual stretch through resistance. It's funny because if you watch the Twitter handle, guys, I don't want to rat on anyone, but if you just watch Twitter on these breakouts, you see all these traders start coming out and saying that they're jumping in the position, that jumping long. These are pure chasers. Okay, so we don't want to get caught on a move like this. That being said, do like the long side of the dollar CAD. Love to see 31.66, soft target 32.17. More importantly, nice confluence here. And here's what the sort of broader picture looks like. As always, guys, feel free to take a snapshot of any of the charts that you see here by clicking on that camera if you need them for future reference. All right. So those are the ones that will be focused heading into tomorrow's NFP print. Again, let's jump into some of your questions and some of the other crosses as well. So thanks for the heads up. Cheers. I try not to watch the Twitter feed too much as it fuels my former bad habits, still an addiction, and I'm mindful. So the best thing to do, guys, and this is a common question, who do you follow on Twitter? Check out who I follow on Twitter. I try to follow too many people who have opinionated research. I just want objective what's going on. I really don't look for, because it will, Eileen, it will influence your opinion, it'll influence your outlook on the market, and now so all of a sudden you're second guessing yourself. If you have a discipline, you need to be blinders to the world, and this is your discipline. So I tend just to try to keep it as objective updates as possible. And clean it up. Don't follow too many people. You'll get bombarded with a whole lot of crap these days. I feel like the use of Twitter is starting to become a little bit more and more. It's got diminishing returns, let's say that, over the years. But for sterling yen, Kelly, before we jump into sterling yen, let me jump into dollar yen, and then we'll jump into the sterling yen. So for the dollar yen, here's what the abomination looks like, first of all, on the daily chart. So that resistance level that we highlighted on Monday turned out to be pretty big hold, right? Oops, 10-4, he says. 10-4, good buddy. That was ended up being a pretty big hold, right? At 11.102, right? Basically 111 region. You had that sliding parallel, the resistance, and again, it's so weird, right? And this is just dollar yen stuff. The slope that dated back to last year's sort of highs, which we broke above, we broke below. The median line still continuing to give us that clear pivot. So this is going to be like the 10th time we've pivoted off that same slope. Even in momentum triggered to the downside gave us the indication. So now we've made it through all the downside levels. Basically, we were looking for a hold somewhere in the region of 110. Once that gave out, it invalidated the long side. And as far as the shorts are concerned, you're coming into a little bit more of a basic key fib level at the 50% retracement. Excuse me, at 108.50 is what I'd be looking for. Nice swing low here for the 518. Had that soft target that kind of just, yep, we went through that as well. Let's see if we can update this at all. Pretty clean. Oh, this doesn't belong here. Let me just readjust that, guys. Bear with me 1 second. Yeah. So that's the 50 line of the current operative structure that we tacked on yesterday, if you guys remember here in the webinar. So basically, it's stay bearish below that on the immediate buys, looking for a stretch into that 50%, 108.50. The lower median line parallel comes in just below. So sort of a nice region. You'd start to look for some support here on dollar yen near term. Objectively, what a clean opening range break finally in this thing, which tends to be very unfriendly with our sort of price action, sold price action strategies. But as it stands right here, very, very clear break. We filled the gap, continued to move lower, tested it as resistance most importantly, and then right off to the races here. So I'd be looking for that drop to be sustained a little bit more towards 108.50. So what does that mean? That means further yen strength in the near term. Here's what sterling yen looks like for you, Kelly. Here's the daily. Oof, 156.35, 156.18, big region. Big region, absolutely. Huh. Okay. Yeah, so this is the deal with this, Kelly. You're short since 64.23. Oh, okay. So you have a lot of room with this. Seeing to cut or hold lower. So here's what I would say from this. I could just tell you my expectation from a near-term standpoint, right? Wouldn't be surprised to see this thing jackknife back towards 159. And that's just on building divergence into this low. You got some consolidation, and this entire low has been making some stronger divergence, specifically with one reference point out, one reference point in, as far as like the above and below 30 region. So you might get a snapback higher. I would still be looking to sell that, Kelly. So if you have the patience and you don't mind holding position, I think you could see a tag of that lower median line parallel, and that's sort of be the nice sweet region to get out. 156.30, 156.17 or so. This is the February low day close. This 618 is 56.30. He says, I agree. I killed this time to add. I'm not sure what you mean by that. You killed it, which is a good thing. Oh, I killed this. Time to add, you're saying. Short. Oh, yeah, I get you. It could spike higher from here. Usually on a stretch like that, you see a little bit of a recoil, but I do want to just stress the behavior of the turn. And go back in price action, Kelly, and see how the last time we turned of this magnitude. I would say this is something considerable or similar, so you could see a snapback like that. This would be the last time I made an outside day reversal at resistance. Whew. You got to go back quite a ways. This would be the third consecutive days of losses. What's a 3-day loss right here? No magnitude. Yeah, I could see a little bit of a snapback, but I wouldn't actually be too worried about it. With a core position entry of above 64, you have some room, I think, to work with. But in general, I'd be looking to shave off a little bit around here. From a scalping standpoint, I'd be looking to take off a lot. My stops would definitely be at break even. This is thanks. Very good point. Thanks, pal. Yeah, you're more than welcome, Kelly. More than welcome. Nice position. That was such a big region of resistance there that we came into earlier in the week. Really nice reaction off it. And a 40 hold in momentum on the daily chart, and a trigger break to the downside. I mean, it doesn't get much cleaner than that. And a much wider range ATR. So for those of you who do want to get involved on a sterling scalp, or if you do want yen exposure but you don't want to mess with the dollar, I think this is a very good alternative as far as sterling yen is concerned. That 164 place was a place of exhaustion example. Yeah, I don't really know where. I don't really know that he must have been in that position, or Kelly must have been in that position for some time, Eileen, because 164 we haven't seen that in a while, right? But this is an example of an exhaustion high, absolutely, absolutely, and especially if you look at it right here. I mean, that's as exhaustion high as you get. Crazy divergence, or at least you are getting divergence on a final spike into a resistance confluence area. And remember, we had this highlighted, guys. This 163.86 level is exact 2014 low. 63.50 being a 1618 off the advance here. So very nice region of which you'd expect to see some resistance. But on the flip side of that, Kelly, just to throw this out as a caveat, if we do get, and Eileen, an exhaustion low on a spike low here, this is actually an area of which I'd be very interested in some possible long exposure. Absolutely. Just against slope support, against the backdrop of a 4-day or a 3-day decline of this magnitude, you would expect to see some whiplash. Again, nothing for a core position, but on a near-term approach, definitely could get some play off the dip into that key region. By the way, 56.18 is actually the low day close for February. I'm not sure if I noted that earlier. So that's sterling yen. Kelly says, P.S. I enjoy these webinars, very detailed, and my entries are very confident. You do great, pal. Keep up the great work. I appreciate that, Kelly. Cheers. We do our best. All right. Some other positions that we were kind of just noting and watching throughout the course of the week. Who in the room? Someone was asking about Aussie crosses that we were looking. I think that was Tabor earlier. Tabor, just a quick look at Aussie Kiwi. If you remember, I highlighted this in a report earlier this week as well. In fact, I think it was the... Oops. Whoops. So here's the last update that we were looking at for Aussie Kiwi, and we were looking at this breakout for that stretch into 107.86. We got that, and it kind of mean reversed on us and came right back. Here's what Aussie Kiwi looks like right now. First on the daily. Okay, this is a big break in my opinion, which is why for me, you know, the Kiwi, it's hard to get excited on the upside here of the Aussie, because Aussie Kiwi sort of looks like it wants to break down even further. Now, truth be told, there's a big 618 at 105.57, which isn't too far from where we are right now, but I kind of had a big hope that we would see some sort of more of a concrete hold right there. So that being said, here's what the intraday chart looks like, and sort of the updated version from these levels. The yearly open at 106.61, we came right back, blasted to the downside, and again, even on a near-term upside slope that we added earlier this week, that lower median line parallel was right at the yearly open, okay, and that kind of validated the breakdown. So from here, kind of leaves me on a little bit more of a cautious approach on what we do moving forward with the Aussie crosses in general. That's why I'd rather play an Aussie dollar just based on dollar performance, because this is kind of scary. Now, to make things blunt and clear, when you see these trades diverge like this, typically one's lying. Okay, typically one's lying. So if Aussie Kiwi all of a sudden starts to break down and Aussie dollar makes a nice upward thrust, remember the Aussie dollar opening range broke to the upside, right? So we're still constructive on this thing. And if this continues to rally, and specifically if it closes above the yearly open and Aussie Kiwi closes below this Kiwi key support, those divergences are typically telling you one of those are going to be a mean reversion trade. And you got to kind of take a step back, make sure you're on the right one. So I still would rather see, again, a little bit more of a prominent dollar pullback, Aussie dollar rally, and that would give us a better opportunity ultimately to sell Aussie higher in the deck here. So watch that Aussie Kiwi performance. It's going to be very interesting to see. You know, this is the yearly low, and that's 618. So kind of running out of space here. On a break below that, this thing is pretty much finito. You'd look for a move. First parallel wouldn't even come in until like 103, 103.60. Another trade that we've been following also is Euro Pound. Remember that rebound that we talked about? Again, right on that major key support last week at 75.64, 100% extension from the decline off the high, and it was basic channel support of the same slope. That rebound charged a nice break. Finally, you got that trigger and momentum. The rally now, I still think you could make a stretch a little bit higher, but you're starting to come into some resistance at basic channel resistance. This level here is defined by the 2012 low. It's basically just above where we're hovering right now. Here's what the scalp looks like. I remember this. We added this yesterday too. Wow. Nice. So we came just shy of a basic 38.2. That's 77.75, which coincided right on with a near-term upper parallel. Nice turn to the downside here. Look for one more spike into this region, then I'd start looking for some short exposure, in my humble opinion. And in that case, it would be a little bit more of a sterling move a little bit lower, then start to head higher. And again, similar thing on this. When you're seeing a divergence in euro pound and euro dollar and pound dollar price action, typically one of them is lying. And those are very indicative and tend to happen a lot more on market turns, near-term tops and bottoms. So levels still look pretty good here. Just want to check out a quick retracement, see if there's any overlap. Yeah, I don't think we need to necessarily stress any of those levels. Again, for the euro pound, 23 pip ATR is actually pretty decent. This pair tends to have very, very, very tight ATR. So they are pound pips, so be mindful of that nominal value. But certainly, I'd be looking for a final spike into a high here before a near-term pullback in price. Looks pretty good. And that is euro pound. By the way, how far back archives do you keep your webinar recordings? I think as far back as they go. I don't know that they actually expire. You should be able to find them all on SB, guys. No problems on that front. They are on YouTube. However, they are unlisted, so you won't be able to search for them unless you have the link. And of course, if you are a member, you will have the link from our page. So no worries. Is there something specific that you're looking for? Let me know if there's something specific. Maybe I can help you identify it, but don't get too much inquiry on that just because it's a very short-term nature webinar. We're talking about price action like over the next couple of hours and days. But yeah, we talk a lot of EDU and a lot of those stuff, a lot of education on different use of indicators, how we really use these opening ranges and whatnot. Okay. We would be remiss if we didn't touch on what's going on in the commodity markets. Again, as we talked earlier, we do have crude distilled inventories, coming out later today. Here's what crude looks like. Near-term support, I don't really have it until the April high, which comes in at 46.72, so a little bit lower from where we are right now. We also did have a swing low that came in there earlier this month, or earlier in May, I should say, on the 19th. Keep in mind, we're just setting the opening ranges here for crude, so it's been actually a pretty decent player of the opening range strategy over the last 2 months. Last month specifically, you got that opening range break on the 16th, while we closed pretty close to the highs. Even the previous month, it was a pretty wide opening range. Whether you consider this a break of the opening range or whether you consider this, you close that session at the highs. That's 2 consecutive months for the oil trade. Either way, be looking for near-term support right at 46.72 and that swing high. You also have some slope support right in that region. Key resistance 51. Nothing's changed there. You also have that longer standing median line structure we've been following since last year. I'm telling you, all this talk about, OPEC wanting higher prices and all this nonsense, that's when you want to start looking for the turn. It's almost comical. But Reuters, OPEC keeps output policy unchanged, fails to agree to new production ceiling. Just crossing the wires, right? Oh, man. This is why we're not fundy traders, Keep price action in focus. Price action is what we're following. Price action is what you're going to trade. And you're seeing some continued exhaustion here, so we'll track this. But I think near term, you still want to look for immediately lower from here. Ideally, you would get a drop into this region, then a rally towards that 51 handle. But again, this is the June open. We'll continue to track this. Gold, everyone's talking about gold and what's going on there. We've basically made a simple 236 retracement of the entire advance from last year's low. So that's sort of on its face value from a weekly standpoint. Okay, no change to that. Last week's break sub 1237 was pretty big. We talked about that here. Just on account of some slope lines that we've essentially challenged and invalidated with that move and close last week. Here's what the daily chart looks like now. Okay, we are at median line support. We are at that basic 38.2 as we noted on the weekly chart. And from the declining slope or the descending slope, you also have that median line to contend with as well. So sort of a congestion region here where I wouldn't be surprised if you see a little bit more back and forth here before you actually make any type of move. As you get later in time, 1205 becomes more important because it lines up with a basic trendline support off the lows. Okay, like tomorrow basically. So we'll be watching this very closely. Also note that momentum more or less on a daily basis has continued to hold 40. So on a break below 1205 on a closed basis and a break below 40 on a closed basis, a little bit more conviction, and this thing could fall apart pretty quick. You'd look for like 1174, you'd look for like the 200-day moving average, but on a longer term, this is from a structural standpoint what you would be looking for. Now, I'm not saying that's going to be the scenario just yet. You're at support right here at 1205, and that's the level to beat to get any downside play, period. Okay, and again, don't be surprised to see some congestion. Remember, the last times that we saw these types of extended moves, if you don't get an immediate snapback or an immediate play, typically it's just preceded or followed by just some more back and forth congestion before it starts to do anything. Sort of something like this. So just keep that in mind on the back of the drop that we just made for gold on the daily chart. Gold on the 30-minute chart. So we went from a weekly to a daily to a 30-minute. Looks like this. So we highlighted earlier in the week, major resistance at 1224. That was going to be the bearish invalidation level. And that's just a basic trendline resistance, turned channel support, turned resistance. Okay. going to drop that level down now from that 236 right to that 1222 region that we've been watching. Was a nice pivot in price last week. And this on the daily chart, guys, is just this. Channel resistance, channel support, trendline resistance. And that's what you're looking at here. I know it's a lot going on in the chart, but all right, so I would still leave room for another spike rally, another move higher. Remember, on a weaker dollar, inherently you start to look for some recovery in gold. It's not always going to be that way. The correlation is not super strong, but certainly is still there. So if you do get a weaker dollar play tomorrow, look for that topside break here in gold, or look for at least a challenge of that 1222, 1224 region. Ultimately, we're still looking lower, I think, on the longer term, but near term, you're at risk for a little bit of a turn higher. May made an outside reversal monthly candle. You're looking at monthly candles on gold? Let's take a look. Sure did. Yeah, it sure did. And not only that, Mario, but the reversal and momentum came right ahead of 60 on a monthly basis. That's pretty bearish, considering you've seen multiple 40 breaks over the last couple of years. Here's another turn ahead of 60. Have we seen more than 4-week declines in a row? Okay, this was a 5-week decline. You saw some consolidation before a move higher. This was a 6-week decline. You saw it snap back right away. This was a 4-week decline, excuse me. And again, you saw a 2-week recovery. So yeah, it's vulnerable. I do think you can see a little bit of a rebound, but broadly speaking, you're still looking lower. Still looking lower. Okay, 9:23, 7 minutes ahead of the U.S. Open. If there are no other questions, feel free to have or throw them out if you do have them. If not, we'll wrap things up here. Keep in mind, again, we'll be back on Monday for a public webinar on daily FX, and then Tuesday, Wednesday, and Thursday, as always, we'll be back here on SB. Tomorrow's NFP print. Stay light, stay nimble. It's the first Friday of June trade. Liquidity conditions this entire week tend to be still thin because there's a lot of people who are still on vacation from Memorial Day, obviously, a shortened holiday week. So especially on the sterling and yen crosses, just keep the powder dry. Once we get into the first full week of June trade, I think we get a little bit more clarity on some of the structure for these near-term positions. Till then, best of luck trading. All good here. Have a great end of the week. Hope your healing continues in all good order. See you again. Thank you so much. I'll see you guys next week. Cheers.